Let's do a sound check here. Make sure you can see a screen here. Let me just pull this out of the way for a second. We have a chart right there. NinjaTrader chart. Everybody there? All is good. Awesome. Thank you. Sound is a double echo, double echo, double echo. Anybody else having double echo issues? Let me know. That might be on the receiving end. All right. Sorry about that. But most I polled the audience. Everyone said we're good on the volume. That's awesome. It's 8:59. We're going to get started in less than a minute. Appreciate everybody coming today. And I'm going to put this back up here and we'll have a brief discussion on risk and we will go forward from there. All right, it's 9 o'clock. My name is Jim Cagnina with NinjaTrader. Thank you everybody for being here today. It's our regular Wednesday live trading setup search and hunt mission. And we're going to be looking at the E-mini S&P today. I just wanted everybody to make sure that they're aware. Risk disclosure is really important. Trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, which is why we're all here, it's also an equation for risk. So be careful. Easy on the day trade margin. Although we do offer low day trade margins as a convenience, use them gingerly and wisely, and take it easy on the risk capital. Make sure you're in a good spot in life and you're comfortable with the amount of money that you are risking in this. Any questions on risk, feel free to reach out to me directly or type them into the chat box. I'll cut and paste some contact information later on in the event. We're going to be trading in sim mode today, real-time practice account, to show everybody how to get one if you're interested. And we'll go from there. Past performance not indicative of future results. We're not going to talk about past performance at all. We don't. We look for trade setups, trade ideas, and we kind of discuss methodology and do some technical analysis and see how it goes. So thanks everybody for being here. Feel free to type in questions. I'll try to pick them up as we go live. I have the chat box kind of sitting right here next to me, so feel free to jump in on that. KM asks, is this being saved and uploaded to YouTube? I believe the answer to that is yes. I'm not sure how quickly it happens after we're done recording, but it does eventually get up on the NinjaTrader YouTube channel. So thanks for asking that question. You could go back and review and pause and whatever you want to do. All right, we'll talk about the commission rebate promotion a little bit later once we get into it right now. But I do want to show this is interesting. This is the E-mini S&P stock index futures, right? And you see this S&P 500 quoted all over television and news and all sorts of stuff. It's a widely followed stock index, probably one of the most followed stock index, that there is out there right now. And it's a very liquid market on the futures markets. And we're taking a look at it right now. And so what I have here is I have the NinjaTrader software at the top. I have the control panel. This gives me a lot of information, a lot of power. We'll go do some tips and tricks on that later on today. I have a daily chart open up here in the middle. There's daily candle charts. That's all it is. And then we're going to pivot over to a 10-minute chart. And on the right-hand side, I have a quote board, market analyzer, which kind of shows me markets that I'm kind of interested in. At the top, I have the stock index futures. The second area there is the interest rate futures. My third area is the energies. My fourth area is metals. And then the last area here is the FX, Forex futures. I call them our currency futures. Excellent markets. The couple of things I don't have up there are like grains, corn, wheat, oats, those kind of things. We're not going to be taking a peek at those today, but these are kind of the ones that I kind of want a glimpse of, what the last price is, what the net change is on the day. And you can see the stock index futures are trading, a little bit negative right now. Not terribly negative, but a little bit negative. So the first thing I like to do is look at a daily chart and say, what's my bias for today? Is my bias in the market overall bullish or bearish? And I don't have a lot of stuff on this chart. It's pretty long term. We're in a bull market, right? And we have been for many years now, right? We have occasional dislocations in price where we kind of break down and then pull back up, and this has been going on and on and on and on for a long period of time. You could chart all the way back as far as you want and see that this is a long term bull market. But let's kind of drill into what's happening now, right? What's happening now? I'm just going to kind of expand my chart a little bit here. The last, I don't know, 1, 2, 3, 4, 5, 6, 7, 8 days, we've been in this channel, right? So I just drew a line at the top and a line at the bottom. This is a channel you could draw with the NinjaTrader software, really easy to do, and say, hey, we haven't traded above this line or below this line in the last several sessions. So we're kind of sideways right now, right? We're marching sideways right now with a bullish, slightly bullish kind of background to it, right? So right now it's like anything goes, in terms of going long and going short. But I'm leaning toward looking for places to buy this market. Now, remember, in futures trading, you could sell instead of buy, or you could buy instead of sell. So if you're buying, you want to buy low and sell high. And if you're selling, you want to sell high and buy low. Pretty basic stuff. That's true if you're trading anything, right? Doesn't matter what it is. It could be baseball cards, right? You want to buy them low and sell them high. So right now we're kind of in this sideways channel here. I drew a fib line here just to kind of put it in perspective from this very low here on the 19th all the way to the very high on the 28th. And what I'm looking at here is the 38.2% retracement level. We're far away from that. We're far away from that. That would represent about a 10% depreciation or pullback, and I'm going to use the word correction against my own religion, because I don't like the word correction, because the market's it's never incorrect, right? The market is, especially the futures market, right? Buyers and sellers are deciding on price, nobody else, and it's real time and it's transparent. So I don't like the word, but I'm going to use it just to kind of help folks understand what I'm talking about. You see a lot of folks on TV saying, "Well, expect a 10% correction," and I'm like, well, that would bring us down to about 38.2. A 20% would bring us back down to about 61.8. And you can see on these price dislocations, we kind of turn around pretty quickly, right? The Federal Reserve has a lot to do with it. The Treasury has a lot to do with it. Interest rates have a lot to do with it. And the fact that these are US-based companies that are propped up and actually pretty good across the board. So right now, my bias is slightly bullish, but I'm going to keep in mind that we're in kind of a range bound area right here. And we have a relatively small candle right now on a daily chart. So I'm going to keep that in mind, small candle. And then we're going to go ahead and just minimize this. We're going to pull up our bread and butter here, which is the 10-minute chart. This is a 10-minute candle chart. Let me kind of stretch that out here, and I'll kind of explain all the stuff that's going on. Now, I'm relatively simple in my analysis, almost always. I have an oscillator at the bottom called the RSI. It oscillates between 0 and 100. And the middle line here is, I just kind of manually drew that at about 50, right? So the idea is, if something's overbought, then it's going to be below 30. If something's oversold, it's going to be above 70. I prefer to look at the 50 line, the middle line, as a gauge to what's going on right now. And right now, the RSI is, pretty low. It'll refresh on the next candle. And as we approach, I want to see how quickly the RSI crosses over the 50 line to make some decisions on the directional bias, or directional momentum, I should say. On the left-hand side is volume profile. We'll talk about that in detail. And then the last thing I have, the only other thing I have, is a moving average cross. My slow moving average is 26 periods. My fast moving average is 6 periods, right? So we're looking for crosses there on the moving average cross to determine, again, direction. And again, they're lagging indicators, but it does oftentimes give us some good information. We had an ADP employment report, which arguably, I have it shaded here. It was at 7:15 Chicago time, I believe. So when you're looking at the 7:10 to 7:20 bar candle, you could see it was pretty, a decent size move down. And then we had a continuation candle. Then we had a stall. Then we had another continuation candle, and we hit the bottom. And so now I'm looking at, okay, so we kind of turned around from that. We have a lot of tails at the bottom of these candles here, starting from this, the last big red candle. There's a little tail here, but then big tail at the bottom or wick, big wick at the bottom, big wick at the bottom, big wick at the bottom, big wick, big wick. This tells me that buyers are coming in. Buyers are coming in and pushing the market up. We found an area of what I'm going to call support. And at the bottom of these tails is the area of support. And I'm going to go ahead and draw a rectangle just to kind of highlight it. And let's see, rectangle is right here. And I'm just going to kind of pencil it in, right? This area is kind of, it's a rectangle because you can't, at least in my opinion, you can't pinpoint an exact number, right? This market is volatile, it bounces around a little bit like a popcorn effect, I like to call it. And so you got to give yourself some room to say, all right, here's the range of support. And this is kind of what I'm thinking right now. Joseph, I'll get to that. Audio is fine. Awesome. All right, caught up on questions. So we turn back around here, and the one piece of the puzzle that I'm missing is a Fibonacci retracement, and we'll go ahead and do that. I'm going to go from high to low today. So I'm going to keep it simple. So we're just going to go ahead to my drawing tools, click Fibonacci retracement, and then we'll just go high to low. It doesn't matter if you go high to low to high, because the percentages are the same. So I'm going to go down to here, and then I'm just going to go ahead and edit it, because I'm really not too terribly interested in the 23.6% number or the 76.4% number. And we just kind of want to unclutter things, right? We want to unclutter things. And so we've kind of broke down here, and now we're retracing back up, and we're between the 50 and 61, right? And in my mind, the retracement ends when we start having closes above the 61, right? Being between the 50 and 61 is relatively normal right now. We do have, my RSI, my 50 line got reached pretty quickly. So we're kind of turning back around. You can see the moving average cross is also converging now instead of diverging, right? The fast one is starting to catch up to the slow one, right? And I just say fast and slow because slow is, it calculates more bars, 26 bars to come up with the simple moving average. And so it changes the rate of change on the moving average is slower than it is on the fast one. It's a relative thing, right? So the fast one is a 6-period moving average. And so it will adjust faster because it's only calculating 6 pieces of data to come up with the moving average. So right now, let's see what happens here. Again, we're waiting. We're waiting to see if we can get a close above the 61.8 before we make any rash decisions. It's 9/11, brand new bar just formed. On the volume profile front, we have an awful lot of volume down around 4,400. And this gold bar here is called the point of control. And the point of control is all as it is the area where most volume has traded since you turned on the volume profile. And I have my volume profile set to start the night before. Now you could log in the morning and it'll, if you have your settings the same way I have my settings, then it'll back populate. So we really have a session view here from 5 o'clock Chicago time, all night, all day up until now, of all the volume, all the prices that have been traded and what volume they've been traded at. And so it's the whole distribution here, I'm going to call it a volume distribution, is weighted toward the bottom, right? It's skewed to the bottom. If you're thinking of this as some sort of a Gaussian shaped curve, it's skewed at the bottom, and the point of control often acts like a magnet. Now, sometimes the point of control changes as volume changes, but right now it's pretty low here. So it's about 5 handles or so below. So there's a couple of trade ideas here in my mind. One trade idea is to go ahead and try to get short and hope the market gets back down to the point of control, which is very possible. Alternatively, the other one is to get long. And then where would you get long at? Well, again, back down to the point of control. So I'm going to put orders in both ways. And so literally right above the 50%, I'm going to go ahead and right click, and I'm just going to click a sell limit, right? I'm just going to sell one contract at the limit as a limit order. The limit order, if this were a live account, would be sent to the exchange. It would be at the CME Group's order books, right? And it'll be in line, waiting to be filled at that price. And if there were people that sent orders there before me, they'll be in front of me in line. If And then people who send orders after me, they'll be behind me in line. So it's FIFO, it's first in, first out, right? So it's pretty fair. It's a fair way to do it. So again, this is trade idea number one. And again, I want to be patient. I don't want to chase anything. I don't want to jump right in. Okay, trade idea number two then is let's wait to get back down to the point of control. And in this case, I'd be even more conservative, and I would say let's wait to get down below the point of control, maybe to the bottom of the value area, which is this dark blue line here, and then we'll try to buy one down here. Now, right now, I don't have a position, right? I'm just kind of hanging out. I'm just kind of flat waiting. I have the market surrounded, by the way. We have it surrounded. The market's trading here. You can see the black label that's moving around, 4405. Red candle here. My order is pretty high up. We may have actually missed the entry on the order. We'll wait and see. That's okay. We have time. I'm not patient. I'm not going to chase. One of the big mistakes that I see that I hear a lot of traders make, and that I've made, is to chase the market because there's this thing called FOMO, right? Fear of missing out. So FOMO, FOMO. It's a real thing, and it's a thing in life. It's not just a thing in trading, and that's something that a lot of traders, especially who have a discrete technical analysis strategy, need to conquer. Right, need to conquer because you don't want to miss out, and maybe your idea is wrong, right? But you didn't get filled, and as a result of that, you feel like you missed out. So you want to chase it. You want to get in, and oftentimes that backfires, right? So it's like you chase it, you get in at a worse price, and then the market turns around and goes right up to the area where you would have gotten your fill the first time around. So this is kind of the whole thing about being patient. It's really important. We are going to be patient, and we're going to wait, and we're going to talk about it. So, and type in questions as you go. So Joseph asks, how can I have the value profile on my chart? So if you're a lifetime license holder of NinjaTrader, then you'll have it, right? So I'll show you how I added mine. I'm just going to right click and go to indicators. And then it'll open up a dialog box here where all the available indicators are on the upper left panel, and you can kind of just move it up and down with your mouse. And then you're going to pick which one you want. Now, I already picked order flow volume profile, and I already added it down at the bottom. When you highlight it, you add it, and then it'll be in the configured area down here, and you can click on it. And then what it will do is it will give you the property settings on the right-hand side. And once you have the property settings on the right-hand side, then you could customize it to however you want, right? You can customize it to however you want. And this is how I have mine customized. It's pretty basic. The main thing here is I have 2 ticks per level, right? So you could make this 1, you could make it 4, try to make it an increment based on the fact that the ES market, the mini S&P futures market, trades in quarter points. So, in my mind, it's either 1 or 2 or 4. And depending on the average, on the range of that day, you might want to adjust it because it's going to give you the same profile, only it's going to give you maybe more or less detail. But that's okay because we're looking for areas of interest, right? We're looking for areas of interest. So in any event, those are my settings. Opacity, all that stuff you could change. Hit OK. All right, so where are we at here? We're at 05. So as volume accumulates, we're going to see the histogram bars change in size, right? So there we go. You can see the numbers moving around in real time. And it's telling us where the market, where volume is accumulating. And eventually, the shape and look of this volume profile is going to be a little different over time. It's going to be a little different because the market doesn't trade at the exact same price all day long. It's volatile. It moves around, and that's why we're trying to participate in that and exploit that. Mark says, I have a lifetime plan, but it doesn't show on mine. Okay, so we just got to make sure, Mark, just reach out to me or your customer service rep here just to make sure you have the right license that's coded into the actual platform, and then you'll be able to. Your license key here is going to be the thing that drives what you get. So we just got to make sure you have the right one. Oops, I don't want to do anything. I want to cancel. I don't want to change that. So that's probably what's going on. You probably just have the wrong one. We just got to add it in for you. So Claude says, if I want to leave TradeStation and the fans go wild, you cannot scale in and out of a trade. So Ninja can. Yeah, you can scale in and out of a trade. So if what you mean by that is, let's say instead of one contract, right? Instead of me trying to say, hey, I want to trade one contract, I wanted to trade two contracts. And then I want to get out of one of the contracts. And then later on, I want to get out of the second contract. Absolutely easy peasy. It's part of it's just and that's an inherently good strategy a lot of times. So you absolutely could do that. Let me just show my cheat sheet here while we're waiting. We're gonna have another candle in a second, but here's my cheat sheet. I kind of do this every morning just to it gives me by cutting and pasting and reading things, it gives me kind of a flavor of the day, right? So today is August 4th. Right away we had early in the morning. This is Eastern time, right? So it's 6 o'clock Chicago time. I was here, by the way. MBA mortgage applications. I'm kind of tracking this. I don't know. I think the whole housing market oftentimes is a really good indicator of what's going on in the economy, and could be a really good indicator of what's going on in the chart. So I like to track those. And the MBA mortgage applications, you could every week you can go in there and just plot this out, and it gives you a couple things. It gives you the loan application volume. It's an index, so it's not a discrete number, but it decreased, 1.7% from the previous index number. And then the refinance index decreased 2%. So those two things together are the ones that I want to keep my eye on. And here's the link for it. I'm just going to cut and paste this into, I know you can't, no way you're going to be able to just see it on the screen and type it, but there's the link for it. As we're kind of breaking down here, we have a new candle. This is kind of good for our entry position. 8:15 ADP unemployment. We talked about this candle here, kind of triggering this downward momentum and maybe even the bias for the whole day. I don't know. We'll find out in a second. Private sector employment increased by 330,000 jobs from June to July. And on the surface of things, that sounds good. But then when you look at the chart, actually ADP was nice enough to publish the chart. You could see the monthly numbers, right? So now we're kind of in a downtrend here from 882 to 680 down to 330. So, maybe not the end of the world, but I think the market reacted negatively to it today. Treasury refunding announcement. There's another link. At the risk of boring you to death, I'm going to go ahead and cut this link, paste this link in here as well. The Treasury has to fund operations of the United States government, and they issue debt. So here they're offering 126 billion of Treasury securities to do two different things. One is to refund some existing debt that is maturing, right? They either have to pay it back or they have to borrow to keep it rolling, and then whatever's left over is going to be additional cash that they raise, which is about 67.4 billion. And from the numbers that we see recently with the Fed and tapering and non-tapering and asset purchases and all that stuff, it's a relatively small number in my opinion. PMI, I haven't seen that number because I was logging into the event, so I don't know exactly what that is. But those typically don't move the needle. ISM also doesn't. EIA Petroleum status report. It's the Energy Information Administration, which is part of the Department of Energy, and they do basically a supply report every week, and that does move the market for crude oil specifically, as well as has an impact on natural gas and some of the other distillates that are derivatives of that. So again, that's not till 9:30. It's 7 minutes from now. So that's kind of the first, the planned news. This is the planned news. We know it's coming out ahead of time. We can go to Econo Day or the CME economic calendar. We can see it. We know it's coming, right? So that's number one. There's unplanned news, right? Government official might say something. The point of control just switched, by the way. Let's take a look at that. Or, there could be some geopolitical thing or some domestic thing that is unplanned. That's usually bad news, by the way. Sometimes it's good news, but it's usually bad news. So let's keep that in mind. We'll talk about earnings in a second. Let's just see what's going on with the chart, though, while we're waiting. Again, patience is a good thing. It's a virtue. So the point of control just shifted up here now because there's more volume trading there, right? The volume is kind of going and going and going. And so we are at 44.01. So we're up about a handle, almost 2 handles from where we were before. We were down here at 44 even. So it's kind of shifting up, and it's going to do this song and dance in this movement around as the day goes on. So one of the things to kind of keep in mind is, well, do I want to change where my entries are or my exits are? Right now I think I'm good. My only worry is if we keep getting these higher lows. Let me tell you what I'm talking about. So these are all higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. We finally have a pullback. I can envision a scenario where we get a higher low, but it's gonna be it's gonna be higher than where we're at right now. So I'm just gonna grab the trade. I'm gonna pull it up a couple ticks, and I'm gonna click it again. That cancel and replaces the order, and everything is good in the universe. Joel, I will start using the ATM strategies here for the automated profit target and stop loss, but because I'm kind of like manually trading with the practice account here, and I'm trying to be dynamic just as part of the presentation. So those are I absolutely do recommend those. We'll have a whole webinar just on those one of these days. Busy. So if there's a setting in the volume profile, let's see if I could find it quickly. Let me go to indicators here. At the very, all right. So, select order for order flow volume profile. And then when you see setup here, expand that, and where it says calculate, make sure that you're not on bar close. Make sure you're on each tick. Because the default might be bar close. So just change it to each tick, and then everything is going to change every time there's a trade, right? So that's how you would do that. I'll leave that up here for a second so you can see it. And hopefully that helps. Okay, and Busy, if that doesn't help, let me know. We'll kind of diagnose it. But generally, that's the answer to that question. I get it a lot. Okay, so what do we do now? It's 9:26. The 9:30 bar is going to be a big deal, and usually, not always, but it could be a big deal, right? Every half hour, we have a 30-minute candle that's been completed, right? The 9 to 9:30 candle is completed. That generates more technical analysis for people doing mathematical models, algos, and just regular chart trading. Also at 9:30, what happens is the 15-minute candles also expire. So we have another 15-minute candle, 9:15 to 9:30, which gives us more information. Then again, the 10-minute candle expires, right? The 9:20 to 9:30. And the 5-minute candle expires, 9:25 to 9:30. So the half-hour markers, a lot of folks trade timeframes, half-minute markers matter, right? Things get triggered into the system. This is actually looking kind of negative right now, in my opinion. Let's kind of pull this out a little bit more. Move this over sideways. Even though we have a decent sized tail here, this candle's not over yet. We got a couple more minutes. And hopefully we'll get some follow through here. We do have a lower high, which is a good thing. Another lower high, which is a good thing. Because remember, our target's down here right around 4,400, give or take. And the lows are here. At this point, you could even be more conservative on your entry and say, no, I want to wait to get into Jim's rectangle here, and so the area of support, because I think it's going to hold, but it also might attract some sellers. So let's wait and get put our position down here. That's a more conservative trade idea, right? So which is fine. In this particular trade idea, I want to make sure I have a stop loss not too far below this rectangle, right? And so what I'm going to do right now is I'm going to go ahead and just kind of look at the bottom of that last, the lowest candle there, 97.75, and I give myself 8 or 10 ticks below that, right? So that would be 95.25, let's say, and then I would right click at 95.25. And I'm going to right click there, and I'm going to, I would be long here. So I'm going to go ahead and do a sell stop. And it's right up here in the menu, and it's there. Now, this is safe to place. And again, if this were a live account, it would be shot over at the exchange, it would be in the order book, and it would be good to go. So, it's safe here because this cannot get filled without me getting my long position, right? So I can't jump over me and create a short position right now. So I'm in good shape. I'm not worried about it. Everybody with me? Okay. And patience is the hardest thing, right? We're waiting and waiting and waiting, and we want something to happen, and we want action. But that's the hard part. That's the dopamine, the adrenaline, the serotonin, all of these things that are happening to you when you're trading live money that you need to set aside. You got to get a squeezy ball, squeeze a squeezy ball, and just kind of, or look at some other markets, or, watch the financial news, or, stuff like that. So, okay, so there we go. We got order flow. Boom, 9:30. Did you see the velocity of that candle? Kind of popped down pretty quick, right? Things kicked in. So we got an order. We got to fill. And right now, this is what we're looking at right now. Everybody is the anatomy of every trade ever made, right? You have a position, we have a stop loss, and we have a profit target. Our sell up here is a profit target. We'll adjust it as time goes on, unless we get stopped out. But this is it. It doesn't get more complicated than this, right? You might have 3 or 4 different contracts on. You might leg in and leg out. That 930 bar is really, really testing our area, our area of what I'm going to call support. And if we close in there, then that would be a bad thing for our trade. If we continue penetrating through it right now, that'll be a bad thing for our trade. But let's see, if our patience is going to hold out. This little indicator here shows us where we bought our contract at, 43.99. And you can see it's color-coded green, which means we're long, right? We bought one. If we would have sold one instead, it would have been red, right? And it shows how many contracts. It's just one. This shows us we're down 2 points, 2.0. That's what that is. It tells you exactly what's going on with your trade P&L. Biz, yeah, I'll put in some contact information for sure. You guys could reach out to me whenever you want. I do have a meeting after this, so it's going to be later on in the afternoon, but for sure you can. Yeah, let's take a peek at the volume bars. And again, we're trading at prices below value. Not good for our trade idea. We're making new lows. We got 8 more minutes before this actual candle closes. So, we can't say we're going to close in the area or not at this point. We don't know. But, we did put our stop a good 10 ticks below, which is kind of a rule of thumb generally. But, maybe we're going to be unsuccessful here. We'll see what happens. Okay, so we're stopped out. The 930 bar, true to form, just kicked in, and we have significant downward pressure right now on the market. We're trading at prices below value. That's these light blue lines right now, and we'll see. Now we got to wait to see where the new bottom would be. My Fibonacci line is no longer valid, obviously, and I have the sell order up here, which I don't want anymore. Right, so don't forget, if there's an order dangling out there anywhere and you don't want it, make sure you cancel it. I'm just going to click on this X to cancel it, and then we're in good shape. Well, we're not in good shape because that was a bad trade idea, but that's the nature of the beast. Sometimes you're the windshield, and sometimes you're the bug. And the idea is, over a longer period of time, you're more successful than less successful. So the volume bars are up there. Thank you for that. We peaked over the 50. We peaked over the 50 on the RSI, and we just didn't get any follow through whatsoever. And then, you know, the 930 bar crushed us. So that's what happened there. The fib line in this particular case, you got to keep dragging down, which doesn't really help. So we're just going to kind of wait and see if we can get another candle with a bottom on it. We'll see if where we close on this particular candle before we make another trade idea. Thank you for that. I appreciate the positive comment. Appreciate that positive comment. So I'm going to well, I'm not going to unclutter it. I'm going to leave it cluttered. Let's kind of move this out. Anything you want me to talk about, type it in. I'd be happy to. We're going to wait to see. There's a big wick at the bottom here. You know, this whole stock index futures market, it just doesn't want to. It doesn't want to go down. I mean, it's going down here, but it just doesn't want to. Let's take a look at the daily chart. I mean, day after day, week after week, month after month. You know, from a daily bar point of view, you know, if you're swing trading right now, you're not worried, right? Because we're still in this range. We're still in this range. And, you know, maybe we're going to stay in this range all through August. Who knows? Maybe we're going to break out. Maybe we're going to break down. I don't know what that was. Something just made a ding on my phone. But again, I mean, this looks a lot less ominous, this chart, than this chart, right? Again, we have buyers coming back in. We still haven't closed in my blue rectangle. And this is the nature of volatility, right? We literally, buyers are coming back in right now. That's what this wick is telling me. Buyers are coming back in right now and pushing this thing back up. Now we're above the rectangle. Wow. This is a, you know, unexpected volatility that we had at the 930 bar, and it knocked us out. Right? If we were still long right now, we didn't get stopped out, then, you know, we still had a fighting chance. But this is the third bar. This is the third bar, you know, lower high, lower high, lower high, lower low, lower low. So we're going to have to wait another 5 minutes to see what happens with this bar before anything of excitement happens. The previous days, 44.13-ish, did you say? Oh, no, what? Which market are you looking at? Claude, you got 14,983. I'm not sure what market that is. Oh, NQ. Okay. Okay. Gotcha. So the NQ, for those of you who don't know, is the mini NASDAQ 100 stock index futures. It's again, widely followed globally, and it's a nice market. It's a liquid market to trade with the CME group. They have a little brother contract called the micro NASDAQ, which actually has more volume in it. You could take a look on the left-hand side here. NQ has about 240,000 contracts so far traded today. The micro NQ has about 356,000 contracts traded. So it's about, you know, I don't know, 50% more, maybe more than 50% more. So that's a pretty good market, very volatile, and you got to give yourself a lot of room for stops and targets. And that's another reason why the micro in this particular case, in my opinion, is better to trade than the big NASDAQ, unless you have a big risk tolerance, big risk profile, big risk reward profile, larger size account. Other markets of interest, the micro E-mini S&P, which we could have traded as well, is, you know, again, the pricing is the same in terms of the market price, that is, and but it's a smaller size contract, right? It's only doing about 200,000 less on the day so far, but pretty liquid. The Dow, the YM, that's the Dow futures. You could trade Dow futures, down 202 right now. 77,000 on with respect to volume. There's a micro Dow, but that's almost too small, right? Instead of a $5 tick, it's a 50-cent tick, and I don't know. I'm not a fan of that. The Russell 2000, mid cap stocks, widely followed, and they do also have a micro. UB is the ultra bond. ZB is the Treasury bonds. Now bonds have come down. Wow, we're down. We were up about a handle earlier today. Now we're down a third of a handle. That's kind of interesting. And there oftentimes there's an inverse relationship to bonds and stock and S&P. Not always, but that's an interesting number right there to me. The minus 11 ticks. 10-year notes, look at that, 1 million contracts. This is probably, of all of the markets that we look at and all of the contracts that we would consider trading, this is probably the most, it has the most volume in it, over 1 million. Very tight bid-ask spreads, a lot of folks on the bid, a lot of folks on the offer. Energies, the micro crude is doing about 1/10 of the regular crude, but 34,000 contracts for a brand new market is not bad. It's pretty good. And then the metals, gold is the big one. Everybody loves gold. There's a micro gold for those of you who don't know. Then all the currency crosses, all the majors are there. I think they're pretty tradable. Let me just go back to the questions real fast. So I use the moving average cross, Richard, just to give me kind of a momentum direction, right? So when a candle touches it, that's not information that helps me. That's not information that helps me. So, it's right now. It's kind of now. It's, I don't know. We were converging. Before we're diverging, right? These two are diverging, which makes total sense. Again, these are lagging indicators, and this downward momentum, perfectly consistent with the math. Then again, we started to converge, come together, and now we're kind of going parallel right now. So we'll see. We'll keep an eye on that. But that's how I use them in particular. But I do want to point out, wow, look at that wick. Look at that wick. That was an impressive wick. I'm going to write down in my notes, actually. I got notes here. And this is another good thing folks should do. I just keep a log of notes, and I'm going to say, the 930 bottom wick was wicked. How do you spell wicked? Was wick extended, then turn around considerably. So watch out for, I'm going to say, I don't want to say the math, but I'm going to say, watch out for systems kicking in, because I think that's what happened, kicking in. So that's a good lesson. It's like, okay, so we have to put a stop in, right? Because it's best practices. I don't care what anybody says, but we're kind of in a sideways market. We don't have any real caustic news today, and maybe what we should have done, maybe wait for entry below, and I'm going to call it support. That's the lesson, and that's what I'm learning just now. This is my lesson, and I've been doing this for a very long time, and you always learn lessons as you go forward. Claude says, very difficult to trade sideways, and then patience, and he used capital letters, so he means it. Richard says, how many contracts would you term a large position? Well, it's all relative to your account size and your risk capital and your goals, and risk capital is really, really important. Just keep that in mind. You don't want to treat this as gambling. You don't want to treat this as a get rich quick scheme. You really want to treat it as a science, as a way to generate income in some sort of systematic fashion. So, how many contracts would you term a large position? So I would, but in general, based on the profile of customers that I've been associated with for over 20 years, I would say, 10 contracts in the E-mini S&P would be a large position for a retail trader. Again, that's just an arbitrary number, which is my opinion. Again, just got to be careful. In the NQ, I mean, if you have a 10 contract position in the NQ, then that is very large. MNQ then is just 1/10 of that, so you could do the math. Yeah, so I moved the fib. I know it came in right. Well, because the fib was parked at the low, right? Let me just read that question out loud. Busy says buyers came in right near the low at the fib you first drew. Right, the low of the fib I first drew was at the low at the time. Now I kind of dragged it down to establish the new low. But this wick is wicked. I mean, it is formidable wick. Let's do some math on it right now. I'm just going to kind of stretch out my chart, and then I'm going to put my mouse right on the body of the candle, and I'm going to click on the roller in the middle. And then if you do the math from where this candle closed, right, which was 44 even, give or take, and the low, which is 43.94, there was a six point or six handle move, which you know, again, given the nature of the day today, sideways slow news is a big candle. So we're going to be aware of 930 moves going forward. I think that's a good lesson, and we'll go from there. The candles are based on yeah, that was the 930 candle. So if you look at it, let me get my crosshair out. You look at it right here at the bottom of the chart, it says 940, but the way the charting is set up is it's the 930 to 940 candle. So instead of saying, hey, this is 930, this is the, you know, let's make it 930 because it's the start. This is when the candle closes. So it's the 930 to 940 candle. So when I say 930 candle, I'm actually not. It should be the 930 to 940 candle. So I'm speaking a little out of school, but that's what that means. So when I say 930 candle and you see 940 at the bottom of the chart, that's when the candle's completed, right? That's the end of the candle. Because it's 945 right now, so let's kind of move our mouse over here. So this is the 950 candle, which means this goes from 940 to 950. We're smack dab in the middle of the time frame. Does that make sense? DC made a good observation. Do you ever draw trend channels? The bottom of the 930 wick perfectly touched the lower parallel trend channel if you drew it connecting the last two swing highs and made a parallel lower line connecting the lower tail of the 9 o'clock bar. Yeah, I think that's right. I think your observation is right on spot. What I've learned over time is, you know, we could draw a million different lines on this thing. We could draw channels, we could draw trend lines, we could draw Gann fans, you know, we could draw all sorts of manual support and resistance lines. And I got to the point where, all right, I'm confusing myself because there's too many lines. So that's why I try to unclutter this as much as I can. But if that type of technical analysis helps you, DC, I'm all for it. You know, I'm not saying it's bad. I'm just saying this isn't, you know, my thing. I'm, you know, as I age, as I get older in life, I appreciate simpler things. And, you know, I appreciate simple things. So I hear you, and it's a good way to go if that's what you want to do. And with NinjaTrader, it's really easy to have multiple charts open side by side. I'm kind of restricted to my ability to do that with respect to the fact that I have presentation software, the Zoom software on one side of the screen, and some of the windows that I was sharing with you, and the questions are on the other side. And I only have 1.5 monitors. And when I say 1.5, I mean I literally have a decent sized monitor now that I'm showing my charts on, and then a smaller laptop. So I always recommend get the best equipment you can get because it's the one thing you can control, right? You can't control market price. You can't control your internet service provider. You can't control the news. You really can't control that stuff, but you can control your hardware and to some extent your internet connection, but you can't control your hardware. You can't control you know, whatever device you're trading on to be as you know, spend a couple extra dollars to make sure it's robust is what I'm saying. Yeah, so Peggy, is it Peggy? Peggy asks, is the micro CL ready to trade now? Yeah, I mean, take a look at, if you look at the micro CL over here on my quote board, 36,000 contracts, it's okay. That's a tradable market. It's not too thin. You know, I'd be careful at night, but during regular trading hours, I think it's tradable for sure. And if you want to add that to your platform, just reach out and we'll get it added. I missed a question above here though. Hang on, let me scroll back up. So Richard says, no, I mean in terms of liquidity getting fills. Okay. So with the ES, you don't have a problem, right? So let's just pull up a dome. I'm going to go to new. I'm going to go to Superdome. And let's pull up, what do I have here? Actually, here's the micro crude oil right here. And you can see it's kind of thin, right? Limit orders, best practice for sure. You know, we have, you know, the bids and asks aren't exactly totally tight right now. And you do see bigger numbers in the bid and ask column, right? Double digit numbers. And there's probably some market makers in there trying to get this thing going. But again, use your limit orders and then place your stops in the right spot and you should be okay. For the ES, you can see the bids and offers are in the hundreds, right? So a 10 lot trade here is not going to, you know, you have a good chance of getting all of your fill at your price, right? It's pretty deep. It's pretty deep. Let's take a look at the NQ. Now the NQ is the bid ask spread is pretty tight. It's one tick most of the time, and again, the volume is a little less here, so you got to be a little bit careful on that particular market. And then, but let's take a look at the micro and see if I could easily find the micro NQ. My eyesight's going to be a challenge here, and you can see that there's a little bit more volume here in the micro. It's double digits. There's less single digits. And look at it move around. It's bouncing around a lot. So keep that in mind. You know, in this market here, if you're trading 10 contracts, you might have trouble getting filled on all 10. But then again, if you're trading 10 contracts, why not just trade a bigger size? You know, why not just trade the bigger contract? In any event, I don't know. You can just look at the bid and offer and try to, you know, you don't want to do a 50 lot here because you're not going to. Sorry about that, guys. You know, either you're not going to get filled at your price or, you know, it could take a while, but you know, you might too, because remember a limit order here, let me freeze this right now. Let's say you're trying to buy 50 here at 35 and a quarter. The market cannot trade below you 35 even, or even below that until you get all of your fill. Right. And that's just how it works. Right. So all the volume there, you'll be blocking the market in essence from going lower until you get all 50 of your contracts. Now you get 20 of your contracts and the market rallies away from you. Then you still have 30 waiting to get filled. The market moved away from you. And that's where you get liquidity, you know, problems. That's when you get liquidity issues. Right. So I don't know. I don't know if I'm answering your question right or not, but that's for what it's worth. That's my answer. I'm sticking to it. All right, let me scroll back down. Oh, I just put my mouse on it. Just put my mouse in the middle here and just my hand is I'm actually, you know, scratching my chin right now. My hand's on nothing. Take it away, it moves. Okay, 50 lot in the S&P, you know, that's a big trade. That's a big trade, but you know, there are folks that do it. That's a big trade. And remember, here's the other thing to remember in this particular market. So let's just pick a number. Let's say the market's trading at 4,400 even. The notional value of that contract, and let me get my calculator out here just so I could be precise. 4,400. The notional value, the way you calculate the notional value is you multiply it in this particular market by 50, because that's what a point is. Each point's worth $50 per contract. So when you do that, you get a notional value of $220,000 on one contract. Now you start to get the sense of the power of leverage and the dangers of leverage. When you're funding an account, let's say you fund your account with $3,000 and you do one E-mini S&P contract, you're controlling $220,000 worth of stock index. Now, if you multiply that by 50, you're controlling what, $11 million worth of notional value? It's crazy. That's a big number. That's a big trader. That's a lot of, you need a big account to do that. So that most of the folks that we deal with and most of us won't do that, right? It doesn't make sense to do that. Anyway, I don't know. Hopefully that answered that question. What are we looking at here? It's 9:53. We're going to wrap it up in a couple minutes here. I'm going to cut and paste some other links in here in a second. So right now, this wick is going to be challenged, in my opinion, right? And so there's another type of trade you could do, and I'm just going to show you how to do it before we log off. It's called a breakout trade, right? If you think this wick is going to be challenged down here at the bottom, which oftentimes it is, you could actually enter an order, and I'm just going to go ahead and enter an order on a sell stop. It's not protective, right? And what I'm saying is, if the market breaks down here, and it's going to go through my rectangle, and it's going to attack this area right here, then I want to exploit that, right? So I want to go ahead then and put a limit order in. And so I'm doing the opposite of what you usually do. I'm entering on a stop. It's not protective. I'm entering on a stop, and then I'm trying to pick up the the momentum on down and trying to buy it back lower, right? That's a breakout trade. Probably not a good idea right now, but I just wanted to kind of demonstrate how one would do that, right? Sell on a stop, buy it back lower, or you could do the opposite, right? If you think it's going to break out on the upper side, right? You could do a buy stop to enter. You'd be long, and then you would do a sell limit to get out. In any event, that's one of the nice things about futures trading. It's really easy to do that. I just right clicked my mouse and then clicked an item, and there we have it. Sent to the exchange that fast, super quick. Okay, couple of housekeeping things real quick. I gotta scroll down until I find it. Okay, here's some information that may or may not be helpful. 14-day free trial. Just go to the homepage, NinjaTrader.com. Just go there. If you're ready to open a live account, and I'm going to talk to you about a promotion really quickly, so don't disappear just yet. Give me a second. Open an account. There's that link. If you want to email me, it's just my name at NinjaTrader.com. So jim.cagnina@NinjaTrader.com. And then there's a phone number. I do have to do another thing here at 10:15. Should be back around 2 Central Time. So if you want to chat, reach out, give me a call. Be happy to talk to you. And again, I'll be here all day Thursday, all day Friday. So that's kind of some just gratuitous information here, which you're welcome to use. Any other last second questions, let me know. We're going to go ahead and wrap it up right now. And right before we do, I'm going to show you the, at the top of the web page, the $200 commission credit. So if you're thinking of opening an NinjaTrader account and you're getting ready to do it in August, because this $200 commission rebate program, it will be available to you. And it's probably a good deal, I think, in my humble opinion. Again, it's my opinion. What do I know? All right. I do want to, the answer to that question, Daryl, is no. No, I'm sorry. Stephen, the answer to your question is no. Daryl says, do we need to purchase or lease a Ninja to place the trades? No, but I'm a fan of I'm a fan of both. I'm a fan of the purchase and the lease. You get a way better commission rate. You get more tools to your disposal. I would kind of recommend it. But let's have a conversation one-on-one about that, because it just depends on what your game plan is. What's going to be your duration? Are you going to be trading futures forever? Are you going to be trading futures for a couple of months and that's it? It just depends on really on your duration and what your objectives are. DC, you are welcome. I love doing them, and we keep doing them for sure. All right, remember, trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in future trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, also equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina, because that's my stress in life, right? We don't want stress in life. We want to be in a good place. Yeah, Sonia, this is a recurring event. So you're going to get, you don't have to do anything. You're going to get another email next week to remind you with a link to come to this. So feel free. And then September, we're going to do some more of these things. So just kind of keep it on your radar screen. We're going to do more events in September. Awesome. All right. Thanks, guys. And I'm going to leave you with this. Be safe out there and be good to each other. Thank you.